Good day, everyone. Thanks for joining us here in the charts. Market Beast, Napoleon Macro. You may be in from a very unusual thumbnail suggesting that there's a poop emoji on explosion or something like that. I want to go over the TAL stock. We recently made a prediction. We got it inaccurate. I'm going to go over everything for you here and let you know what I'm looking for over the next few market days. So welcome back, loyal family. If you're new here, we got this call inaccurate. We're very transparent when we get it right or wrong. So let's dive right into the charts here, shall we? All right, so it is July the 16th, 2021, and the current price of TAL, T-A-L, is going to be $19.81, slightly negative 9.7% for the day. Okay, so let's just kind of go over a quick credentials check. How we made this inaccurate call. So we made a post on June the 29th, 2021 saying, will this stock explode next week? We are currently in the week of the quote unquote explosion. That did not happen, guys. But we did follow up with a video 2 to 3 days later, July the 2nd, saying that this stock may not explode next week. Of course, parenthesizing the or quotations rather, and the may not, because we still didn't know whether or not it was going to happen. So obviously it didn't happen, but here's a chart and what I want to show you. Okay, all right, so there was just this this very narrow descending channel that the market was just kind of finding support, discussing resistance, right? Resistance, I mean, they're just beating the price down. Of course, as until recently here, it appears that the market has broken out of the disgusting descending channel, with the lack of a better term there. So do I still see potential in this market? Yes, but it's a very narrow window of opportunity. Let me just explain to you what I mean when I say that. So I'm going to give you a range if you're still interested in participating in this market, which I'm still interested. We bought a contract. We took a loss. We explained on that previous video exactly how we were going to approach the market on the close, and we exited the market. Okay, so we took our loss, and now we're looking to re-enter, because I feel like at some point, I mean, this is a very vicious move to the downside. And at some point, I think this market will need some sort of relief, okay? From the highs, the market has gone down like 80%. So whether the market is in preparation to move sideways and then make a move higher, I mean, I'm okay with that as well. But for a market that has retraced 80%, I think at some point there must be some sort of, you know, relief bounce, whether it's going to be a substantial bounce or not. Actually, let's measure these two candles right here, because from the low here at about July the 8th all the way up to like July the 9th, let's see how much of an increase that was in the market. It was yeah, so like a 35% move to the upside. And I'm not like justifying that small move to say that, yeah, that was a bounce. Maybe that was a bounce. I just know that at some point it will move higher. Maybe that was it. Maybe it's not. I'm looking for a sideways consolidation. The target is actually $35 if the market can stop bleeding here at some point. Let me give you the range here, guys. I talk a lot, pardon me there. So the range is going to be 1875 up to that close of that daily candle. What I do is, let me just kind of explain why I'm saying that number, so it doesn't seem like I'm just throwing out random numbers. So one of the reasons why is because of the daily candles, which I do not like basing my entries on the daily candles. But if I had to use something, the reference point would be this daily candle here on July the 8th. So what I do is I take the close of that candle, which is at about $19.51, and then I take half of the candle's body, or like a portion of the candle's body, and at like $18.75. So that would be the range, $18.75 up to $19.51. But yeah, definitely don't like buy contracts, guys. Just like, if you're gonna buy anything, I mean, stock would probably be my preference in terms of understanding a better risk management system if you are able to participate in some sort of bounce here in the short term. So yeah, again, 1875 up to 1951 would be that range of an interest, as a very high risk play in case of a bounce here in the short term. The sellers are not playing with this market, guys. I'm not sure what this company did to the sellers, but they are not happy, and they're pushing this price to the downside. Now, the one other thing, let me just kind of also show you all the reason that I was interested in this market. Let's pull up the volume here. Let's just kind of erase this for now so that we're all clear that I always have intentions or at least a strategy when I enter the market. So this candle caught my attention right here. You see these are 3-day candles here. This candle right here, June the 17th, 2021, this very large volume. So when I see a volume enter the market like that, what I typically do is I take a range. I just take the wick of that range and I just kind of outline it just like that. So obviously I have different price targets on the daily. And on the 3-day here, I'm just kind of going by that candlestick and the wick. So I just put a range, something like that. And the range on that wick is going to be in between $20.37 all the way up to $23.15. There is a very strategic institution, one buyer, I'm not sure who did this, but they are interested in this range. And the reason that I say that is because it's represented on the volume of this candle and the lower shadow. Now, when I see this, it's easy for me to find out where is the sellers and buyers obligation level. So if I just erase that for 1 second, and I'll just make this like really simple to understand, guys. You put the buyer's obligation at the close of this volume candle here, okay? And then you take another horizontal line and you put it at the seller's obligation level. So we'll make that a red line. Okay, hopefully, I know this is kind of confusing. I don't even know if this is going to be marketable, guys, the way I understand price action, because it's complex, but it's not. You just have to know what to look for. Okay, so the seller's obligation is going to be this red line at about $20.45. So what that means is the sellers have an obligation to follow through to the downside, meaning obviously you see this red candle is kind of pushing down. They're following through with their obligation. So that means on the next candle, if the market buyers cannot push the price back above $20.45 on the next 3-day candle, so basically before July the 22nd. So by July the 21st, if the market is not back above $20.45, that means the buyers are the buyers who entered the market on this 3-day candle here are failing at holding the market up as they stepped into the market represented at this wick, and they're actually going to take a pretty substantial loss on their positions in the market as they tried to support the market on that 3-day candle. Excuse me. Hopefully that makes sense. Okay, so I'm always looking at the the mechanics behind the price action and the volume. Okay, so that's pretty much what I have, and yeah, it really looks like the sellers are pushing this price down, guys. I'm still slightly interested. This is a very high risk play, reasonable reward on this play, and I'm going to base my market entries and exits on the 3-day candle, mostly. But of course, the daily showed me some interesting level down at about, again, 1875 and 1951. But within 3 days, you know what to look for. Okay, I know you have to just put all the pieces together, guys. And when I'm looking at the daily, I'm looking for something specific. I'm looking at the 3-day, something specific, and the weekly as well. And we'll give a quick shout out. There was a comment. I have to give credit to where credit is due. Whales Lover. Thanks for the analysis. Weekly shows 2 bars reversal and mini bearish engulfing. We will catch a knife, sir, eventually. So he was obviously on point with seeing that bearish engulfing as we did exit the market on this video, because we've seen something in the close. Listen to the video. You'll know exactly how we approach the market. Also, the other thing was he made a prediction about the waiting for reversal on Tau 13 to 17 range. It came down to that level perfect at the $17 level, represented at this lower shadow on the July 6th candle. Reached a low about $17.13. Beautiful call, man. Hats off to you there. So yeah, guys, if you have like predictions or if you know something, I am no know-it-all. I'm a bit arrogant. I get it at times, and it's difficult to listen to me, but I'm always open to learning. That's the bottom line. I'll get this stuff wrong a million times, but I'm always open to learning from someone else, whether you are, quote unquote smarter or not as smart as me. Everyone's smarter than me, at least. I mean, I think so in my head, right? So that's all we're looking for, I guess. Let's sum it up. The range on the daily is 1875 up to 1951, which is obviously below that level there. But notice the buyers, I think they're going to continue to step in here and try to capture this price. Whether they have enough strength to hold it up or not, they're going to try and buy this market up, okay? So we're looking at that from the daily, but remember, on the net before the July the 21st, you're looking for a close above $20.45. I got to get it on an exchange, guys. I'm going to start buying this asset. So leave an appropriate thumb just below the video if you enjoyed the content. Leave a comment so that the YouTube algorithm can promote this inaccurate video and get the message out there that Napoleon, sometimes he get it right, sometimes he doesn't. Also, if you're new, we covered the alternative markets, Bitcoin, altcoins. Kindly subscribe, hit the bell, and we'll send you that information when it is available. Okay. I appreciate you guys putting up with this. We'll talk soon. Execute your strategies. And bye for now.